Boyd Reader, the highest common event variables, but this is what you do instead. Pick up the progressive speed. That makes it fun. You can't figure this thing. Oh my god. Professional sports, what passion? That man is still doing it. All it takes is just dying right now. Okay, the Boyd Reader is about to go down here a little bit. And there we are. It's good. Whatever is out, turned up on it, now 10,000. I was probably going to put some receipts. I was not going to matter if those Dyer won the game. Oh, I saw good. Oh, it's fine. We won. I carried the game. G.I. Willis won. Sign Arco. That's not good. G.I. Willis. He said things. I am not John Walker. I am so good. They probably knew it was me when I started spawning the Zeds. Okay, guys, I gotta go. This John Walker is spawning me.
Three man siya taman. 12 mo siya kasugod.
Oh, yeah, then 4, 5, 6.
6 din. Pagka 7, 8, 9.
The music.
Sir Joy. Naman si Ma'am Lori Mary mo. Nagtabiyo pa siguro bata, Dam. Sa last na mga kuha na. Ubay naman mga 1 4 naman siguro. Then karon mga 4 pud tingin sila mo report. Reporter po karon ma'am. Okay, okay. Okay dam. Murag kuan tingin sila mag-report karon 5. Okay, okay, okay dam. Sir Joy. Sir Joy. Sige sir, masugod na ta. Kaya para mamapuntag sa'yo. Ang mo question, iniguman na lang sa reporter. Mura yung puti sundo na tutong pattern ni madam. Sila ra ang mag-attendance dam, sila mag-screenshot pero ako lang na pong i-inform ninyo nga nagkuha kog recording sa ni kay in case mga si madam o copy natay kapakita sa tuwang recording sa report. Okay ra sa inyo? Okay, salamat. Okay na sir, okay, clear kayo.
Big brother, explain.
Dito. No Q&A.
Nene, gamay kuya, kailan ko yung report na yung nagkuhan. Sa paggamay, 3. Na.
finally beat us. Now he was now with new tires. Yes, now he waits till he got it in. It's probably going to take a month or two. We'll figure. Well, it's been fun. We have it for years. I know that. Don't be excited. We got to make a game first. I'm the most powerful tire. Yeah, he's kind of busy. We've been waiting for 5 months after we got leaves. Well, that's all the one. I just need to. Well, this is taking for a while. I know that. It's almost good to look slow. Maybe you forgot us. No, maybe forgot. That's just busy. You guys are down the road because the one who gets released first. Yeah, yeah. What's a coincidence? There's one of them. If that's our gas, I'll take one easy block. No. Why? Let's go talk so. Why? It's not fair. Why you are?
mga yung soft copy sa picture ni Alpha.
Mm-mm.
Sa mga yung simbahan.
Si Roger.
Oh, na kay prepare para umat simbahan dari pa April.
Ngayon ang sa recipe ng simbahan. Sini. Okay, thank you, sir. Wala na yung question? Patay, oy. Okay, sir. Sige, sir. Basin unya na, unya pa na mo question. Si Ma'am TC naman siguro, Ma'am TC. Wala kay question siyang report, Ma'am Jocelyn. Okay, fulay clarification. Proceed siguro tayo ni Ma'am TC. Ma'am TC, mato nagpakuan ganiha. Mo next, reporter. Si Ma'am Marilyn.
Ma'am Jessie left the group.
Murag di man ready si Ma'am TC, kinawala siya. Si Ma'am Marilyn sa ta, Ma'am. Okay, madam, take your time. Sige, ma'am. While naghulatan ni Ma'am Marilyn. Yes, madam. I-open lang ilang account, madam. Dayon, i-message lang ang imong transaction. Ning play naman siya, madam. Ano, nagkuha na ka, nag-present na ka. Yes, ma'am. You are now presenting. Oh, palihog lang ko kung play sa imuhang kuan, madam. Slides kay para mudak ko. Imuhang slides dam. Kana tapad bitaw diyan na ng volume bitaw si imuhang kuan. Nasa right side sa ubos. O kana tapad na dam, tapad. Ayaw, kana tapad kanang murag cup. Tapad pa dam, kana dam, kana. Okay, dam. Take your imuhang ng floor. Loud and clear, ma'am.
pieces. Oh, wait, what? I feel like we just got pulled. Destroyed by a giant fidget spinner. Hey, oh, it's a sleep jar. Respect dog. Even like, I'm sorry, fidget spinner. We respect you here. You bought one, see? I'm gonna touch it. I don't want to touch the button with this. Now, when we used the giant falling ice suppose from the sky, we turned them into pop stop. We just finished the course. You know what, you guys? You know, I'm a stuck like this. That's what they think about this topic, okay? Thank you so much. Fidget spinner. Fidget spinner. Fidget spinner. Yeah. Spin. Give me a hand, please. Great. Siri, come on, don't be like that. You guys use each other's heads. Go. Go. Jump. Hurry. You got this. You don't got this. Okay. Come on. It's not. Is something going to show up? I think we're just from observation. Please stop hurting us back. No, we're not. I think you should just go look at us now on the computer. Hey man, can you help me? That's a no. That's a no. Rainbow, you get to press one, sing for us. Rainbow's already hurt. Ow, something just showed up in my face. I didn't like that. I didn't like that photo one bit. Oh. What do you like?
This or de comer. What does that mean?
Gising na ni Roger. Yung reply na. Yan daw.
What does orange do? It's dancing but those versions, kuya. Dancing to a version. Yes, Sophie has a new update, kuya. Kuya. I know, I already saw that. It's cake update? I saw that already. I saw that yesterday. Cooking our cake? New stuff. Emergency RP. Very nice. It's so worth
But just like Hong Kong has a lot of secrets in the past, here are 20 things you never knew about the Glock pistol. Number 1, it didn't start in France. The company's namesake, Gaston Glock, was born in 1929 in the first Austrian Republic and worked as an engineer. He started his corporation in the years after the Second World War and set out to become the world's most successful manufacturer of certain knives. As the first stage children's music weapons, he got a little closer to his iconic invention and walked out into the for the next 2 years. But if you want to design every kind of fire weapons that use in experience, military made. Block glass started in hospitals, but it quickly gained reputation as one of the best manufacturers for military supplies. Not only were its knives top quality, but it got into developing training grounds, casings, and machine-gun platforms that would hold up in the field. That created a need for mass production as the rebuilding after the military wanted supplies. So in 1980, Gaston Glock bought an injection molding machine that quickly produced all the components for the equipment. And that was the beginning of
Close.
Wow.
another issue. A fairly
Princess, mabuti.
Gaston Glock worked at his Jordan's workshop and when he started presenting his first pistol in 1980, he worked with employees who came from the pistol, were experienced in working with tanks,
You
and
first,
he took
kuya?
less than a year from design to production.
Very bored.
Ilan na? 3? 3 ang volume niya. Mo ikusgan wala.
Kay kinay mo gud ang voice.
Diri ka.
Oh, I think that one. Helicopter. Right.
Stalkers is now 50 trying to push me past 1,000 following labels.
That's disgusting.
It's $20. That paid $20.
$20.
Mhm.
20 pesos. Emergency role play. Cook it. Like World 2029. There's now cake house. Wow, cool. I used to play that game. Like, what? Probably well, yeah. Oh my gosh! Wow, they have that ambulance now. Cool. What else is there? There's emergency RP. What else is there? Now, what is this? What is this? Oh, I can't see you. Quad bike. Okay.
This new map is pretty dope. It's very detailed and it's actually kind of big. The thing is, I think it's pretty terrible for like just normal cars because it's just straight past that. I think the tractor you just have in the middle and then just circle around. It's a big circle around a fully functional helicopter. Costs us cheaper than a dude with a mini bar. That is the greatest deal of all time. And I find that it's
Cheap. The helicopters were cheaper than a major. Lucky Bob has appeared near the police station. Find and catch up with him. We're done.
Sasama ka na po.
It's too plain. Joy. I need 2 kids. $9,000. Okay, now you don't have to be lazy. Doing that, is it? No. Yeah, okay. In this Tokyo, you don't have to be lazy. Wow. What we say? What? Oh my God! Look at that. You can just press it and then you. Wow, they're not lazy, right? We have is Korean. They remove the pizza.
If I go to see that I need jobs. Any new jobs. Imagine I need new jobs. Office worker.
And sailor.
Supermarket. Bodyguard. All this is new.
I saw that. Wait, no, I never saw these. And this. Right, Kuya?
What? What's it?
Cowboy?
Koda.
I never saw that, and I never saw this. How is cheap? So they really want RP. No, my slipper!
Oh, what?
It always falls. The mysterious Lucky Bomb slipped away. Maybe we can catch it next time.
Rina.
To the 28th. Wait! Paper airplane! What the heck? What is this? Sukhoi!
Bad content.
Whee! It's stuck in my hair. Bad content. Wait, what is this? What is this? Wait, Kuya, check this out. Check this out. Pew, 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 pew. Kuya, check this out. Bam, bam, bam. Kuya! Shut up. Go. No, So we're trying to get on my card. It's 2:41. Ow, ow.
Very Nande.
No, I already literally said the time. It's 2:41. Look back. Wala lang, hindi ko katulog pa.
Hmm.
Eight people like it. Like, yeah. No, it's 249.
Okay, thank you, Mama Marilyn. Oh, si Ma'am TC. Walay question na to sa kang mama. Unya na lang, no? Okay. Murag excited na kay si Ma'am mo report to. Si Ma'am TC na ready na. Yes, ma'am. O pero mura gamay-gamay man dam i-landscape daw dam. Naman siya dam pero gamay kayo. Gamay kayo dam, gamay. Di maklaro. After na nino kay si Ma'am Jasmia. Okay, madam.
What's this? Hair?
Yes. More hair. Mask. Oh.
Okay, ma'am. Sige, ma'am. Go ahead.
It's not tanker. It's not tanker. It's not tanker. Tanker.
Saan?
Put stuff on that next. Go. Oh my god! You did it!
I did it!
You made it match!
Can you put more accessories or no?
Yeah.
Oh, yeah, we can.
Wala pa yung mga kuan dam. Ah, presenting na kadam pero di pa makita yung mga kuan. Slides.
Yeah, because it's getting in.
Yeah, there, we have from.
Yeah, that's cute.
O kana madam, cellphone man imong gamit no?
Hello.
Pero kana okay naman tingin na siya dam pero i-landscape lang siya.
Body. Body. You can change my
Kana kato.
behind my face is
Frog.
I'm a frog. Aww. Ribbit. Yeah, it's because I started a party, dude.
I-play daw dam. Ano to landscape?
Should I?
Is that your
Time
house?
to go. Yeah.
Can I see?
Dili na ba ako kabalo ng sa cellphone dam kung ako sulay yung gamit na ng cellphone? Wala kay laing monitor ni mo diha.
Are you ready, Doctor? Is it cool? It's only for friends. Yeah, those are for free. The ones without any icons are for free. If you want to change the house, just remove it and then select the house you want. They're gonna steal your house. They're gonna steal your house. Click on it. Get it. Hey, now I have a shop. I have a shop now.
What?
I think that's a shop. Oh, it's three.
Oh, mga biskuya oy.
What? What's that?
Timer. You have to wait.
Okay ma'am. Siya to isunod si ma'am Dismia. Okay ka madam?
It's dancing 12 hours.
Okay, sige madam.
Look, a wolf's gaming mix. Play it. You can't see.
Okay na yung screen dam pero wala pa siya i-play na lang siya dam para mudak ko. Okay, sige dam. Maybe I did not take my password. Ma'am, oh, okay na madam, kana na madam, okay na.
Phobia. Bye. I will go for a haircut. I take your hand. If I don't get her, I will have to buy you on my house because I can't do that anymore. If I don't get her, I'm not giving anything. I don't need anything. But I won't give, but I probably won't get her. Wanna know why? Because I'm still at 29. You're not? No. 43.
Kaya siya, wala pa siya nakatrabaho, wala pa nakahire. Eskwela sa daan, sa mga no? Ano siya ko? Oh, grabe, dagan na rin mo nahurutan na. Uy, sugar na. Inom rin dagang water.
I ate lots of fruits.
Yeah.
I'm sugar honey, but we don't know. I'm sugar high like you. If I don't go once today, and you don't pick it up, I'm buying you a house. And then I'm buying you. Do you believe it? Do you believe me? I don't know.
Day 2 of the same English
Kuya! You said we're
Mawala na po na, mawala na, mawata pangita.
Always found it. Like, well, like, there's a game called White versus Green. What you gonna do about it? Green versus what you gonna do about it? I don't know why are you singing that song? I don't know. Woo! I didn't eat any food during battle. I only got the food when we got you should use all these stuff for your own weekends. Oh, we ate a lot of food. Princess of chickens now. You're princess of chickens now. Just die, Rainbow. You won't be a chicken anymore. Jump! I'm not sugar high anymore. I have drunk water.
Rainbow, you want KFC?
Now it's next to like what? Punch it. How am I supposed to snap the like button? Do I break my screen with the punch it? Punch the like button like that? I punch it when I have a mouse. It's not a tough one.
Okay, thank you, Dam.
Na magkasusik sa ate.
She should buy that. She's the
Okay, Dam. Kinsay makatag og kuan diha na suggestion ni Madam. Mao si Mama Marilyn siguro na siguro sa suggestion. Mao sa suggestion man daw to yung ipangayo, Madam. Sa may mga dugay-dugay na kadiri sa service, no? Si Sir Jumar. Pwede na po na mo niya. Ito na lang tapbuko na tanan. Okay. Sa mga queries. Sige, Dam. Ma'am Tese.
Don't quit real funny. She touches the floor. No, I can't walk on the floor.
Okay, Ma'am. Okay, while waiting ni Ma'am Tese, nalang ko yung gamay input nung kang Ma'am Marilyn ba nga report ka ganiha about sa work from home. Okay ra sa inyo ha, mga classmates?
Bye.
Ang katuyo to sa work from home, Madam, di ba? Kung man to, imo mo itong i-suggest ka ganiha nga mag-work yun ta sa balay ba sa work from home. Kay ingon sa mo ang chip si ID diri sa province, one jud siya kay kung masakpan ka nga
CID. Why is there no
naglatagaw ra ka ato kag mo during sa work from home nga time nimo makasuhan ka og loafing. O mao na tong bantayanan kay tong kaso ana loafing gyud na siya og masakpan ta dito mga superiors. So then ang kula pong query to Dam Badam ngano man ang atuang di ba sa health benefits Badam dili mapil na to ang kuan dito no annual medical examination.
Why? Why? He's so
O mao gani ba dapat to dun ta apil ta na tong annual kay murag kada tuig na magyud ta ni gipamedical. Di ba on expenses na to no tuang medical no wala tay kuan. Mao lagi niya usap-usap nang ang inyong medical exam karon Madam sa kuan nagyapon katong mato gyud kag magpa-laboratory test dinana pa sa inyo ha sa city. Oo, mao. Pero sa last year, Madam, no, kay pwede naman sa center, no? Karon kay nag-usab na pud, no? Okay, Madam. Ready na si Ma'am Tese. Sige, Ma'am. Iko, nag-iko, madam. Ah, okay na madam. Loud and clear na, okay. Ah, ning iko na pud, madam. Yang imo isa ka mo, ang usa ka monitor nimo madam i-mute para dili mo iko.
It broke the set.
Ma'am, nawala imong presentation. Ah, play na lang imong PowerPoint dam, okay na.
No.
Ma'am, excuse. Mawala imong audio dam kay mo feedback man gud imong kuan dam monitor. Mawala imong audio. Echo yun siya madam, mag-echo.
Reset, you little working girl. What the?
O ka na dam, nindot na ng audio dam.
The floor is pink. The floor is rainbow. It was a boom boomerang. Stop! Sugar, high sugar, good.
Wala gid si madam.
Eight others. are doing.
Ang Tessie. Ngahon tanong ito ni Ryan. Si Ryan Ruday, kasunod ani.
Going stairs.
Okay na ma'am, si Ma'am Lagon. Okay na, present na siya. Okay na ma'am, nindutin mong audio. Okay na ma'am, go ahead.
Don't cross the road.
No. Iko no? Iko siya no? Hindi pa magkakahupin kay ako mga kapag gamit ana. Di ba mas kuwang-kuwan? Ipinili Pwede ko lang, wala yung sport.
Why do you not hit the trees, Kuya?
Wala, XTC. Standby lang sa Takajut kay na-out si Ma'am TC. Ma'am Sharon. Ma'am Sharon. Ma'am Sharon Ann Lagun. Ma'am Lagun. Lagyo mo ni Ma'am Kwan Dam, ni Ma'am TC, lagyo mo. Okay. Basin pwede na to mahangyo Dam na yun nga sana to si Sir Ryan while ni what pa siya? Okay na na. Pero wala pa man kasunod si Ma'am TC Dam, na out man siya. Yes ma'am, yes ma'am. Okay. Okay ma'am, sige ma'am. Okay classmates, the report of Sir Ryan, I will be playing for his report since his internet connectivity is also very slow.
City of enemies in a nutshell, part 3. Hey guys, if you're unscripted, I would like to put a junior against for following my own
Kira mo dyan sa karayahan? Ha?
Hey guys, before I start the video, I would like to credit Julie just for inspiring me to make my own PBS video. Now with a family device, living statues, crystal, medieval Bible, all finished by looking feeling good. Not real different. Reading it, really. Second,
The podcast industry in the U.S. is on pace to exceed $1 billion in ad revenue this year. That is roughly a 60% jump from the numbers we saw last year during the slow periods of COVID. Startup Moonbeam is looking to help listeners navigate what is an extremely saturated market with the help of machine learning. Let's bring in the founder of Moonbeam, Paul English. You also know him as the co-founder of Kayak. And Paul, it's great to talk to you today. Walk me through how this all works, because I think those of us who love podcasts can attest to the fact that we sort of get stuck in listening to the same ones because they're so great, but the element of discovery is always a little more difficult as the space gets increasingly crowded.
Yeah, I mean, the way other podcast apps deal with this largely is you read a lot about other podcast shows and you sort of scroll through and you're reading and reading and reading. And I thought that was a poor way to do that. And so what we have is a feature called, the app's called Moonbeam, and the feature is called Beam, where we just play content for you, and it's a curated clip. If you don't like it, you just swipe up and go to the next clip and the next clip. And it's a way to discover content by immediately listening. And we have a combination of human editors, which are curating sort of the best moments of a show. So you don't have to listen to a full hour-long show. You just want to listen to the sort of the highlight clip. And if you like the show, then you can subscribe and listen to the whole thing. That's the basic idea.
Yeah, and Paul, that idea stands out to me because, as Akiko knows, I hate podcasts, can't get into them, too long, they all sound the same to me. I'm a visual guy, but I do like the idea of having a platform like this to really focus in on the highlights and have it learn in terms of what I like. What kind of growth have you seen in terms of the early uses from, I guess, your customers out there and the way that they've interacted with the platform?
We just launched the app a few weeks ago. We're getting really good feedback, getting lots of 5-star reviews. People enjoy it. the best feedback that I get, that we've gotten from the reviews and from people who send feedback in the app, is people telling us about a show they discovered that they otherwise never heard of before. And that's kind of the whole point of Moonbeam. It's, we're going to show you something really cool that you might not have found on your own.
When you think about the growth in this space, it really is incredible to see over the last several years how much of it has evolved. And you know, there's everything from sort of the originals, as some would call it, like This American Life, to sort of the Joe Rogan type podcast too. When you look at the overall trajectory, where do you think we are in the growth phase of podcasts? Is it still in the very early innings? Where do you think eventually goes?
I think it is in the early innings. I think consumers have shown that they like consuming content like this. I mean, Audible is also really popular. People like listening to books, has become very popular. Clubhouse is really popular. People like live audio. And I think for podcasts, what we're going to see over the next couple of years is more personalization, so you get the shows that you listen to and better recommendations, because there's way too many shows out there to be able to navigate all of it. And so you need a technology and tools to find the shows that really going to really match your interests.
And on the creator side too, interesting to see in-app tipping being one of those things you guys are talking about on the platform. How important is that really to kind of create that two-way street between the people consuming the content on Moonbeam, plus the creators getting maybe a little kickback and reason to turn to you guys to help find new fans?
And the creatives have to have some way to support their show. And we think just by adding this one-click tipping mechanism built into the player is a simple way that if you get inspired by something, a story that is really touches you, something poignant or funny or educational, just with one click, you can send $1 to that show, or more than $1, whatever you want. We're just trying to make it really easy for the people inspired by your show to send a financial contribution directly to the creator.
And Paul, in terms of podcast consumption, you know, the thinking was during the pandemic that it would drop a little because people, as I do, listen to podcasts on the way to work when they're on the go. I know we had Audible on before who said that actually consumption didn't necessarily drop, but the types of content that was consumed on audio did change. What are you seeing in this space? Are you seeing an uptick now that more and more people are outdoors, going to work, commuting, and listening to podcasts on the way? And what do you see is particularly popular?
So the feedback we're getting from our users is really a mix about how they consume podcasts. People are getting back to work, so people are listening in the car as they're commuting or on the train if they take the train to work. Some people listen to podcasts when they're out for their daily walk with their dogs, or as I do, I listen to podcasts every night in bed. And the Beam feature is a really fun way for me to just discover content, because it'll play a 2-minute clip of something interesting, then the next one, the next one, the next one. So it's a really cool way for me to discover new content.
And lastly, Paul, I mean, it was interesting because we saw such a big wave of enthusiasm when Clubhouse launched for the people on the platform, which is basically, I guess, podcasts, live podcasts, if you want to call them that, and everyone kind of doing that. Then you had Twitter Spaces kind of coming in, stealing maybe a little bit of the thunder there. I wonder how you look at that space as Clubhouse now moves past their invite-only stage to kind of be open to everybody. What that new rise in live might do for podcast demand, and how you see those two sides of the coin maybe interacting.
I think both types are important. People like consuming content of different types. People like going to YouTube, they like Netflix, they like TikTok. I mean, people use different tools to consume content for the way they want. And I see this with audio as well. I mean, I don't look at Clubhouse as an alternative to podcast. Clubhouse is interactive, so where the participants in a room get to talk as well if they're invited up by the hosts. But the nice thing with podcasts is the best podcasts are incredibly well produced and edited. So it's a really efficient way to get very, very high quality content on whatever subject it is you're interested in.
Yeah, absolutely love them. I feel like there's not enough time in the day to listen. But Paul English, Moonbeam founder, it's great to have you on today. I appreciate the time.
Hi, everybody. Welcome to the July Market Snapshot. As you know, I sometimes will tackle economic stories. I'll sometimes tackle market stories. Sometimes it's very big picture. Sometimes it's a bit narrow. I want to blend the economy and the market, but in the context of a discussion about sentiment. As those who have read my reports, who have seen these videos, I do focus a lot on sentiment as it relates to both the market and the economy. And in this episode, I want to look at the combination of both and take a look back into history to see how these sentiment conditions that exist now, what they've meant for market behavior in the past. So the first one I want to start with is actually consumer confidence. So we're now looking at sentiment on the economic side of the picture, not so much on the market side of the picture, but I want to tie it into market behavior. So the chart here is a simple look back to the late 1960s of the measure of consumer confidence tracked by the Conference Board. It's a monthly reading. There's one headline index, which is shown here, and the gray bars, not just on this chart, but any other chart that you see gray bars, those represent recessions officially. And the reason why we have that gray bar at the most recent period of time extending out to the present is because, as most people know, there has been no yet official declaration of the end of the COVID recession. So for now, it's still officially in recession territory. And you can see, obviously, that confidence ebbs and flows, tends to deteriorate, certainly in the beginning part of a recession, usually bottoms around the end of a recession and then starts to move up. So the pattern that we've seen is not inconsistent with what we've seen in the past. That said, the trough in consumer confidence was quite a bit higher than what you typically have seen in recessions. And that had a lot to do with just a massive amount of stimulus and fiscal support that came in that I think buffered that consumer confidence. So we're now on the way back up, not quite yet back to where we were at the highs before the COVID recession, but take a look down below. This may be a bit counterintuitive, but it's in keeping with investor sentiment when it gets stretched toward optimism, toward extreme optimism. Historically, the market has had a bit more of a struggle. And that actually can be applied even to economic sentiment measures. So you can see three broad zones here for consumer confidence. And that highest zone is when confidence is above 106, which clearly we are right now. And you can see the annualized returns for the S&P 500 during those periods. Not looking at deep negative returns by any means, but low single-digit returns. Certainly worse returns, interestingly, than when confidence is low. Because we have to remember the stock market is a leading indicator. It tends to move in anticipation of the improvement in metrics like this. We can also look at components of consumer confidence. Within the survey that's done on a monthly basis, not only are the surveyors, the Conference Board, asking a simple question about how's your confidence, but then they have sub-questions that ask about how do you feel right now? That's the present situation. How do you think you're going to feel in 6 months? What's your outlook 6 months from now? And that's the expectations component. So unlike during the pandemic, when you saw, during the pandemic recession, you saw that big spike up in the spread between those two, that reflected a period of time where consumers were saying, boy, I don't feel great right now, but my guess is, given stimulus, given that we'll come out of this eventually, I'm going to feel much better down the road. The opposite is now happening in the more recent period of time. As that line has moved down, we've moved into negative territory. That reflects that consumers are saying, I feel pretty good right now, but I'm a bit worried about down the road. So the expectations component is what has deteriorated. You can see that when you get down to low levels in that spread, and then you start to move back up, that actually is indicative historically of a recession coming. Now, this is a very, very unique period of time, obviously, especially given that we don't even yet have the declared end of the recession. So I think it's well too soon to say we're facing economic trouble here, but this is something definitely worth watching because we're seeing that deterioration in forward-looking confidence relative to the confidence we feel right now. We can also now start to transition into the investor side of the equation by looking at CEO confidence, which is typically directly correlated to corporate profitability, which, if you've been paying any attention to the earnings environment, earnings are absolutely on fire right now. Second quarter earnings for the S&P 500 are expected to be up nearly 70% on a year-over-year basis, and that is reflected in very high confidence on the part of CEOs. Now, this confidence measure, also put out by the Conference Board, doesn't have as long a history as their consumer confidence measure. This goes back to the mid-1970s. But again, you can see the ebbing and flowing of this. And you can also see that this recent surge in CEO confidence is to an all-time record high in the history of this data. Again, on the surface, that would seem to be a great background condition for the stock market, given that CEOs are running the companies behind the stocks that drive the stock market. But as you can see down below, in keeping with the stock market generally pricing in a lot of what we're now just starting to see in things like earnings and confidence, the market has actually had lower annualized returns when confidence is in its highest zones versus in its lowest zones. And I don't think it is a stretch to say that a lot of the good news that we're in the midst of seeing right now has arguably been priced into stocks, given the stellar performance we've seen over the last year or so. Now I want to shift to actual investor confidence measures. And I always think about sentiment from an investor perspective as having two buckets. There are sentiment indicators that are attitudinal in nature, survey type data where you're basically asking investors, what do you think about the market? Are you bullish? Are you bearish? And then there are behavioral measures, tracking what investors are actually doing, what their positioning is. And I tend to focus a little bit more on those behavioral measures because it's actual real money gauges. And this is one of the broadest measures we can look at. It's a fairly simple one, but I think an important one as we think longer term looking ahead. So this is overall exposure to equities by all U.S. households. It comes from FactSet data combined with Federal Reserve data. And you can see, and it's the blue line we're talking about initially here, that we are up at about 60% in terms of the overall exposure to the equity market that U.S. households have right now. That's not quite to the same extreme as what we saw back in 1999, but certainly getting close. And there's nothing to prevent this from continuing to go up. We're not here to say, okay, it's now peaked like it did in 1999 and about to come down. But what it does potentially give you a signal of is what the next decade is likely to look like from a returns perspective. And that's what the yellow line shows. It's the subsequent 10-year return for the S&P 500. And that's why the line doesn't carry fully through to the end of this period, because quite frankly, we don't know what the next 10 years is going to look like. So that's why the yellow line stops 10 years prior. To put it in clearer context, you can look at the table down below, and it breaks that blue line, that household equity exposure, into quintiles, into 20 percentage point buckets. And you can see we are clearly in the highest quintile based on history, and you can see what the average allocation was in each of those quintiles. And then that far right column shows the average annualized return over the subsequent 10-year period of time. And then the two columns that precede that just show the range, the lowest return, the highest return, again, over to that average. And much as with some of these other sentiment indicators that I already discussed, we're not talking about negative returns, Armageddon-like returns, but certainly more limited returns than you typically get when you're in that lowest quintile of household exposure. Think about the late 1980s, right into 1990, the setup for what was the unbelievable boom bull market of the 1990s. That setup was somewhat a function of equity exposure having been quite low. So that fuel for additional gains was much more significant than during a period where exposure is high. So it's just something to keep in mind, and maybe a bit of a caution about extrapolating the kind of returns that we've seen in the last year and a half or so too far into the future. Another very interesting and very popular chart, every time I show it, be it in a report or on a video like this or on Twitter, is put together by actually friends of mine in the business, a great research partnership of ours with a company called Sentiment Trader. And they track real money gauges for two particular cohorts. Now, these are their names, not our terminology. This is Sentiment Trader's terminology. And they label the cohorts the so-called smart money and the dumb money. And the dumb money is not really in specific reference to individual investors or retail traders, but they're looking at odd lot, much smaller position speculators in the equity-only options market, some of the movement in and out of some of the mutual funds, bull and bear mutual funds that are heavily focused on by shorter-term traders, and then the so-called smart money are the big commercial hedgers, the big position traders, the big speculators in the index futures market. So very different cohorts. And what they found is at extremes, the smart money tends to be pretty accurate and the dumb money tends to be less accurate. And in particular, when you get to a very wide spread between the two of them. In fact, if you look back to just about above the middle of that 2020 marker on the bottom there, where you see dumb money confidence at an extreme high, smart money confidence at an extreme low, that was just prior to the pandemic bear market that started in February of last year. So that was sort of a perfect setup based on these metrics. Then by virtue of the bear market that unfolded, you see those two moved in the complete opposite direction. And in that late March timeframe, you had the perfect sort of opposite setup where smart money confidence had surged and their positioning had surged to the bullish side, while the dumb money was reacting to what had been a very brutal, albeit short, bear market. And then you see we've seen some waffling along. What's most interesting maybe about the 2021 period until recently, is the first several months anyway, is the dumb money was actually right. Their positioning stayed very positive, very bullish, and that was actually right. And more recently, the smart money hasn't been quite so accurate, and they've been scrambling a little bit to move up to a more optimistic positioning. You can see the two are close to converging. So this isn't a perfect indicator by any means, but if we continue to see that dumb money confidence come down and smart money confidence go up, this would actually be one of those sentiment indicators that is not a negative potential signal for the market. So just wanted to, even though it's not an extreme right now, it's such a popular pair of metrics that I show, I wanted to bring that into this sentiment look. Then we've also got something called a panic euphoria model. Citigroup pioneered this many, many years ago, but they're proprietary in terms of how they construct this model. So again, our friends at Sentiment Trader decided to try to reconstruct their model and put it together in a way that was a bit more transparent. They can provide us with the background data and we can put it together like you see here. And it really is a cross spectrum of indicators that span not just the investor side of panic or euphoria, but also brings in some economic type sentiment measures, similar to what we showed with consumer confidence and CEO confidence. So there's some Wall Street and Main Street components to this panic euphoria. And you can see just a couple of months ago, we hit an all-time high of euphoria as measured by a model like this. And this was really one of those warning signs that even if not a significant bout of weakness to come, probably more volatility. And quite frankly, where we have seen a lot of that real speculative excess in some of the non-traditional pockets of the market, be it in cryptocurrencies or SPACs or the meme stocks or heavily shorted stocks, non-profitable tech stocks, most of those segments are down anywhere from 30, 40, 50% from their recent highs. So we've seen some of this speculative fervor wane a bit. The good news is it hasn't been as concentrated in the traditional market averages, and that's why we haven't seen the same pain. So we're seeing a little bit less euphoria, and it's manifested itself in weakness in these non-traditional areas. But the good news is that that heightened speculation has been less evident in the traditional market, which so far is, I think, good news for investors more broadly. Where we are seeing a big pickup recently are flows into equity ETFs. And this ties back to that household equity exposure chart that I showed. What was interesting about the recent surge in household exposure to equities is that only recently have we seen fund flows pick up. You can see for several years, 2017, 2018, even into the beginning of 2019, we were actually seeing a move down in fund flows, yet that household equity exposure continued to go up. What that reflected is that investors were not rebalancing that much. They were letting their equity holdings expand as a share of their overall assets because they weren't trimming them back, they weren't taking profits. And you've added to that recently by flows actually picking up. So this is, again, a behavioral measure of sentiment that hadn't been tracking some of the euphoria that we were seeing in other sentiment measures, but certainly the very recent period has kicked that into higher gear. And again, something we need to keep a watch on because at past highs, that has not been an overly positive signal for the market. Wrapping it all together is a crowd sentiment poll that my friends at Ned Davis Research, I've known Ned himself since the mid-1980s when I started in this business, and he does some unbelievable work on sentiment, and we do a lot of research sharing together. This is a crowd sentiment poll that he has been keeping for decades, and it's an amalgamation of 7 separate sentiment indicators, all of which are widely tracked by pundits and investors and economists, and it's a nice consolidated, wrap it all up way to look at sentiment broadly. There's behavioral measures in here, there's attitudinal measures in here, and you can see, although down a little bit recently, we are in the extreme optimism zone in terms of sentiment, which generally is a contrarian indicator for the market. You can see that in the table below. The zone we're in right now, where sentiment is at its most optimistic, actually the market has had slight negative annualized returns. And that's just something to be mindful of. I'll conclude, though, by saying that sentiment in and of itself is not a very good timing tool. It doesn't tell you that a move by the market in a contrarian fashion is going to happen imminently. It just says that the risk is a bit higher, especially if you get some sort of negative catalyst. Last year, as I talked about, that negative catalyst was the virus. Talk about the mother of all catalysts. We don't really have a negative catalyst right now. Inflation, I think, represented a bit of one earlier this year. We did get a 10% correction in the NASDAQ when we had that first spike in yields in anticipation of the inflation we're seeing right now. I would put maybe a monetary policy mistake as a possibility. And then the fact that market breadth has been deteriorating a little bit. That positive market breadth tends to serve as a positive offset to sentiment. That's less so now. So this is more of a message to just be on watch because sentiment is generally skewed toward the extreme bullish end of the spectrum. That just sets up the possibility for maybe a bit of weakness, a bit of volatility to the extent we get some sort of negative catalyst. Thanks as always for tuning in. I hope you enjoyed this report.
About sa mga topics sa itong mga reporters karon? Or sa next na tamo question, na si Madam.
Well, the investing world rocked last week when Charles Schwab announced the firm would go to zero commissions on equities and ETFs. Well, what's next in the race for new clients and new products? Bob Pisani is on the floor with an investing legend, Mr. Charles Schwab himself. And he has a new book as well. Bob, take it away.
Thanks very much, Scotty. Investing legend Charles Schwab has written several bestsellers prior to this. His latest book, Invested, I read every word of it. It's terrific. It's a personal memoir of the company's histories. It's just been released today. Let's talk to Chuck. As the ad used to say, he joined us down on the NYSE floor. That was my favorite ad.
Thank you, Bob.
When was that, 2005?
Well, that
Talk
was
to
it.
Chuck?
Yeah, it was.
That helped put your face out there as the face of the firm itself. Did that give you a competitive advantage?
Well, you said so. I think it did. But we'll never know. But I think people were familiar with me in face. They knew that we would be honest people. At least I looked honest at the time. And so we delivered.
I got to ask you about the zero commission thing you went to last week on equities and ETFs. It really rocks the world. You moved all of your competitors. You moved your own stock. What was behind that decision?
Well, you know, we joined the New York Exchange in 1981, many years ago. So prices then, when we first came on board, we were about half price. We kept coming down every year to now. It was sort of the final solution for investors. We have a great deal for investors. You can buy and sell stocks for no commission. That's what I really wanted to do. I thought, just like other companies, we make our money on other relationships. You might want advice. You might want to have a fixed income or things like that. We'll make a little bit of money there, but commissions on stocks now are free.
Yeah. So where does this end? So you obviously commissions are an important part of your revenue, but you have a huge banking division that arguably is much more important revenue-wise, and you've got wealth management. What happens next? So do you go into your interest rates and say, okay, we're going to offer you a little higher interest rate on the bank? How do you keep? Where does this end?
Well, what we try to do is offer things that customers really want. And they definitely want lower prices. And so we've been a company that's been involved with that by using technology for many, many years and pulling the benefits and the efficiency of technology. We have one of the lowest cost companies in the financial service business. So therefore, by being very thoughtful about how we spend our money, we can deliver great value onto our clients.
But this aggressive move on your part is sparking a lot of talk about more consolidation in the business.
It probably will happen.
Is there going to be 3 or 4 competitors? Going to be you, Ameritrade, Robinhood? Where does this end?
Well, it could be, and we don't know how that will unfold, but that's a very logical conclusion that will occur.
Is Schwab a potential buyer of anyone out there?
Well, certainly at the right valuations, we would do it, but we are really strong and very independent the way we do things. And so if it happens that's appropriate for our shareholders, we will do it.
Let me move on to the IPO market. You've seen what's been going on. We had a very strong first half of the year. We've had a little bit of trouble recently. WeWork had to withdraw over valuation issues and other things. One of the most interesting parts of your book was your IPO in 1980. Most people don't know this. You withdrew the IPO when you couldn't get the valuation you were looking for.
That's right.
You had to wait another 7 years. You did went public in 1987 very successfully, but you pulled it initially, just like WeWork.
We did.
Did you have any advice for WeWork about what they should be thinking about, or anybody else?
No one came to me for that advice, but I live right in the middle of where all this stuff is occurring in San Francisco. So I see all these dream boats going on in terms of valuations, and some are so unrealistic because the companies are still losing lots of money. When we went public, we were making money. So it's a different atmosphere today. There are a lot of losers, and I don't know whether WeWorks or whether some of the other companies, Uber, will they make money? I don't know.
Is it fair for them to be pushing back for the people, the CNBC viewers who are going to be buying these IPOs? Is it fair for them to push back on the IPOs? Are we overvalued in the private space?
I would never buy a company like that that has huge losses and no scene and no sight ahead of you. How are you going to make money? I mean, you want to buy companies that have great values. And that means, number one, they have to be growing in revenue and they have to be making money. And that's a pretty simple formula. And a lot of these companies just don't make money yet.
We talk a lot about ETFs here. Schwab has muscled into the ETF space in the last 5 years. You're now number 5 from nowhere.
I don't know if we muscled in. We just offered great value. We had reduced the OERs down to something like near zero, not quite zero. And people are attracted to it.
How do you feel about that whole active versus passive debate? A lot of people are complaining too much money is in the passive space, but you've been a big advocate of that for years. Is there too much money there?
I don't think so. I don't think so at all. I think there's always price discovery going on all over the place, whether it's venture capitalists or Wall Street, here in Wall Street right here where I am right now in New York Exchange. Price discovery is going on all the time, and analysis is going on. There will always be some people who, like myself, when I first began in business, will try to evaluate companies, make assessments, and judge it and see if the price is right. So passive investing is clearly a path for most people. It's really easy, great diversification, and low cost.
And you've been a big advocate of that. You started that Schwab 1000 fund, the passive fund, many years ago. You were way ahead of that. Josh Brown's got a question over in Englewood Cliffs. Josh, go ahead.
Hi, Mr. Schwab. I'm a big fan of yours and also a client on the custody side, and I appreciate everything you've done to lower the costs for investing. I wanted to ask you about one of the things people mention